let me start. Yesterday, today is on Thursday. Yesterday on Wednesday is when we had the European Central Bank Forum on central banking. It's still ongoing, but yesterday we had the policy panel discussion, and we had the Fed Chairman Jerome Powell. We also had the Governor Bailey of the Bank of England. We also had Christine Lagarde of ECB, European Central Bank, and we also had Bank of Japan governor. He's not listed here. There was a Bank of Japan Governor Ueda. Yeah. So there were four main central bankers having that policy panel discussion on the future of monetary policy for these big major economies. So that's what I'm here to discuss. But today I will discuss the highlights of what Chair Jerome Powell said, because the monetary policy stance of the U.S. is what affects all the other currencies and generally what other central banks are going to do. So looking at the highlights, this is Powell says more restriction is coming, including possibility of hikes at consecutive meetings. Fed Chairman Jerome Powell talked through on inflation. Okay, so let me just skip through all this. Let's go directly to the highlights. Listen here. Yeah, multiple interest rates increases ahead, and possibly at an aggressive pace. Yeah, Jerome said he believes there's more restriction coming. Yep, Jerome said that he believes there's more restriction coming. And what's really driving it is a very strong labor market. The labor market is very tight. There are almost 2 jobs for every unemployed person. So that's something that, of course, is a threat to the tightening the Fed is doing. So that's why he's saying this. What's really driving it is a very strong labor market. This possibility of rate increases ahead and at an aggressive pace. Last week, Jerome Powell said a possibility of the rises coming at alternate meetings, like what he did in June. In June, they paused the rate, and maybe in July they're going to hike, and then maybe in September they're going to pause, and then maybe in October, is it October or November? In November they hike. So last week, when he was at the last week, am I remember correctly? Yeah, last week he said the possibility of at possibility of raises coming at alternate meetings. Yeah, last week is when he was testifying before Congress, and then now yesterday he said that might not be the case, depending on how the data comes in. Continuing, he also said there's a significant possibility that there will be a downturn. Powell said, adding that it's not the most likely case, but it's certainly possible. Yeah, he was. If you watch this, you remember he was asked about, is there a chance that we could have a recession? I said the possibility is very significant, and but it's not the most likely case. Although policy is restrictive, it's not, and it may not be restrictive enough, and it has not been restrictive long enough, which leaves the door open for more increases. Yeah, this is something I said. Yeah, the policy tightening started, and it has been ongoing for a while now, and they're in restrictive territory, but they have not been in restrictive territory long enough to stop hiking rates or to consider the job done. You get yeah. So and then the another main highlight he said was, I don't see us getting back to 2% this year or next year, and when it does happen, it's likely to be in 2025. So yeah, we are in 2023. He said this year, inflation is not getting back to 2% this year or next year. That's likely to happen in 2025. Yeah, I think I can get that exact transcript. Yeah, it was here. I see us making steady progress, but I don't see us getting to 2% this year or next. I see us getting there the year after. Yeah, this is where I said I don't see us getting back to 2% this year or next year. I see us making steady progress on this core inflation. Headline inflation is coming down. That was lower than the core, but on the core inflation, I don't see us getting to 2% this year or next year. I see us getting there the year after. We will be restrictive as long as we need to be. But if inflation is coming down sharply and we're confident that it's on a path to 2%, that will be a different situation. You will begin to think about loosening policy, but we're a long way from that. That's not something we're thinking about now or in the near future. Yeah, this is probably the biggest takeaway of this whole discussion. He said the PCE numbers, the core PCE numbers, even the CPI, the core CPI, those numbers, they are only, he sees them inflation stabilizing at 2% in 2025, meaning you can expect tightening for the remaining part of this year and the whole of next year also. So, but that might not be the case, of course, because these predictions are usually mostly inaccurate. Yeah. So there was an article here, not this one. Powell does not rule out rate rise upcoming meetings. Yeah. So earlier this month, Fed refrained from boosting its federal funds target rate for the first time since the central bank started raising rates in March 2022. Target rate was at near zero levels, leaving it at between 5% and 5.2%. Fed officials have said the lack of action gave them time to take stock of the state of the economy, while the cumulative impact of past rate hikes filter into financial conditions and economic activity. But even with that pause, Fed forecasts a form of gathering pencil in half a percentage point worth of further rate hikes, raising the question of when those increases might happen. Okay, so going back to what Powell was talking about yesterday, he didn't exactly say that the terminal rate could be higher. He didn't say that. He just said that he thinks more rate hikes are going to come, and they're going to come at an aggressive pace. Yeah, so that's what he said. And the discussion in general was very hawkish. Even the Bank of Japan governor uh, was also advocating for rate increases to tame inflation in Japan before it gets out of hand. I think it's currently at 3%. Yeah, it has been below 2% for like 20-30 years. Yeah, so that's how it is in Japan, but currently it's at 3% if I'm not mistaken. Yeah, and the Bank of Japan governor is stepping in to even prevent their currency from being too weak due to the ultra low rates they have used for over the past 30 years. Yeah, so this is why this even the Bank of England Governor Bailey, he justified his move for raising the rates by half a percentage point, which was above what the market expected. The market was expecting a quarter percentage point rate hikes, a rate hike of, yeah, you remember that. Let me not go there, but you remember it happened. He justified his move, and even the European Central Bank Governor Christine Lagarde said that they're still a long way from being done with this thing of raising rates. Yeah, there's more tightening coming. It was a very hawkish discussion. So this is when I'd like to shift to the charts and see what happened. Oh, so this is the euro. This is the euro USD, and let me switch to smaller time frame. And this is the setup I had some time back. Let me. Okay, I think this is good. Yeah. So yesterday, Wednesday. This is Monday, Tuesday, and then on Wednesday. It's around 1300 hours. Yeah, this is when the 1330 hours GMT. This is when the talk, the discussion began, and the euro sold off for the next hour and tried stabilizing, and currently it's I think, yeah, there's more potential to the downside. I think here now we're just waiting for the GDP release today at what's the line? Yeah, today at 12:30 p.m. 12:30 p.m. UTC. The GDP of the United States. Where is it? It's today. GDP of United States being released 12:30. I think that's what's likely to be the next catalyst for this price to continue the leg downwards. Yeah, I think that's when the move will start. So let me not go deep into that. Let's go to something else. DXY, the dollar index. So this is this is how it happened. Yeah. So this was on Monday, Tuesday, and then on Wednesday. If you watched my previous video, I did say that this Wednesday move is what's likely to happen if Monday and Tuesday started off like this. When the DXY is selling off, like on the days leading up to the meeting or the discussion, it was very much expected that Jerome would be hawkish. So yeah, it was only sensible to expect the dollar to gain strength during this Wednesday. On Wednesday, yeah, gain strength, and here we can see there's a retracement here, and price is likely to continue the upward leg. Yeah, so that's it. That's what I think is going. That's what is today is Thursday. Yeah, the GDP index push, the GDP price index, I think, and the GDP itself. Final reading for Q2. No, this is final reading for Q1. Likely to push price of the dollar index upward, and then on Friday when you get the PCE, of course. Let's look at it. PCE price index year over year. You can see 4.6%. Core PCE 4.7%, and you can see here from this chart, core PCE is very sticky, and this is what the Fed is saying. It's going to take 2 years for this thing to come down to their 2% objective. Yeah, 2% objective, and maintain that level. It's going to take 2 years. So yeah, see the PC price index. Yeah, this is what the market is watching, and yeah, this is something that even on Friday, the dollar index will continue to rally. Not to be a prophet, but assuming, okay, let's assume we connect these lows like that. Okay, let me even use a better tool. This one. Yeah, let me even use a better tool for this kind of work. So you just want to connect this series of higher lows and see if they match with the series of higher highs above. So you can see they match. That means in the next 2 days, okay, not just in the next 2 days, for today, and even in the next 2 days, price is likely to continue playing within this channel. And yeah, so for today, for example, you can expect this intraday high of the dollar index to be refreshed. Price may be stabilized around here, and then for tomorrow, maybe price might make a retracement again to probably these levels. Let me not add another line. So make a retracement, and then when the PCE comes, which is at around 12:30, yeah, 12:30 GMT, UTC, the index might shoot again. So that's it. And then we close the week green on the dollar index. So of course, when I say that, you know what that means for the USD pairs. Of course, for something like this is gold up here. This is my setup yesterday I had for that discussion. My entry was initially activated, went well. I got taken out break even, and then I missed my re-entry here. Here is where 1912, 1910 is where I was expecting my re-entry, but I missed it. So yeah, this one will have to continue without me. But for this one, on this pair, maybe on the euro, on the on the what, on the pound, maybe Canadian dollar. Yeah, maybe I can look for setups there. Okay, now let me look at the stock market before I continue. So this is the stock market. This was the reaction yesterday, Wednesday, 28th June. So the stock market was flat for the most part. Yeah, flat for the most part. When the discussion was ongoing, price really fluctuated a lot. You can see here the intraday high was made and then cleared out the entire move, almost refreshing the intraday low, and then price went on to now climb up again. Yeah, so the Fed is saying they don't see inflation getting to 2% for the next 2 years, right? That means they're expecting policy tightening to continue for quite longer than they initially expected. But the market is showing something else because looking at the daily, looking at the weeks, looking at the weekly time frame, uh, the S&P 500 is just something else. Let me switch this one. I think this one is clear. 1 week. Yeah. Looking at the weekly time frame, the market after the October lows is it's only going up. The market is actively fighting the Fed because it is natural that when the Fed says more policy tightening is coming, the market is likely to sell off. But this time, that's not the case. The market is buying and buying, even when the Fed said, uh, "Oh, I think we're going to do two more rate hikes." The market still pumped, and it's a very odd situation, let me call it that. But an even more odd thing happening here is that this index, the gains in the stock market, are mostly held up by three companies. Three companies, you know the stocks: Meta, Tesla, and Nvidia. Nvidia, an AI stock, big, has more than doubled this year. Okay, all those three stocks, Meta, Tesla, and Nvidia, they have more than doubled this year alone so far, and that's what that's what's driving the gains in the market. If you look at the Nasdaq chart, I think Nas 100. If you look at the Nasdaq chart, the uptrend is more strong because these companies, they are tech companies, and they're really driving up the gains. So yeah, the market here is fighting the Fed, but I don't know for how long this will continue. Let me not get deep into this analysis. Let's just wait and see how things will play out in the near future. As I finish, the last thing, this one is important. We look at it. The CME, Fed CME watch to refresh. CME next FOMC meeting 27 days. So here's where we check the probabilities. Is it loading? Yeah. Here's where we check so the market is now pricing in an 84% chance. There's an 84% chance of a rate hike in the next meeting. A 25 bps rate hike in the next meeting. This is what the market is expecting now. And as we have seen today, we have no, this is tomorrow. Today we have the GDP Q1 final reading, GDP price index final reading for Q1, and then on tomorrow we have the PCE. So this probability of there being a rate hike in the next meeting is likely to continue rallying. I'm expecting it to be at 96% probably when the PCE comes out, because there's a very high probability of the PCE coming out above estimates. Here we can see how the probabilities have changed. 1 week ago, on 22nd June, the probabilities were quite somehow balanced. You can say because there was a 25% chance of pause and 74% chance of a rate hike. But now we're at 81. No, now we're at 84% chance of a rate hike. So yeah, that's what's happening. These probabilities are really something to look out for when you are going to trade these USD pairs, mostly the euro dollar. Euro USD is very sensitive to what the DXY is doing. Even the pound, but not so much. But the Euro USD is what I have seen is very reactive to changes in the dollar, the macroeconomics of the dollar. Yeah. So now let me stop there. Hope you have a good day and a good weekend.